Hey friends, Lucian here with the Bullish Bears team, and I wanted to make this video on EMAs, or exponential moving average lines. EMAs are probably one of the most, if not the top indicator, other than candlesticks, that traders look at. Moving average lines really are essential on any time period that you're looking for. That whether you're a long-term trader, short-term trader, or a day trader, traders from around the world really obey and watch moving average lines. So what I'm going to do is I'm going to show you quite a few examples of moving average lines with different stocks and different periods of time. Show you what to look at. I want to try and simplify it. I don't want it to be very technical for you. So if you want to look at more of the technicals or read more of the definitions or see more of the ins and outs of what EMA stand for, go over to investopedia.com. It's a very helpful or handy resource where you can really learn the exact definitions and learn more in depth really about anything to do with the stock market. We love this resource, so head over to again, investopedia.com, type in EMA or exponential moving average, and you'll see this here. I'll just read a paragraph or two just to let you know what it says here, but I really want to show you, um, you know, really hands-on what it actually looks like and what it means. So what is an exponential moving average, or EMA? Well, an exponential moving average is a type of moving average that is similar to the simple moving average, except that more weight is given to the latest data. It's also known as the exponentially weighted moving average. This type of moving average reacts faster to recent price changes than a simple moving average. Now, breaking down exponential moving average, or EMA. The 12 and the 26-day EMAs are the most popular short-term averages, and they are also used to create indicators like the moving average convergence, or the MACD, and the percentage price oscillator, the PPO. In general, the 50 and the 200-day EMAs are used as signals of long-term trends. So, let's go into it and let me show you how this all works. First of all, not every trader is going to be the same. Some traders like the 12 and the 26 EMA. Some like the 9 and the 20. Personally, I like the 9 and the 20, and we use it a lot because we're day traders or very short-term traders. So we're day traders or swing traders. We like to see real quick movement because we want to get in and out of our stocks because we're short-term traders. Again, there's other people that are long-term traders as well. So you'll see on my charts here, you'll see this blue line. Again, I just color it blue just because I like more vibrant colors. I like the contrast between the green and the red. Again, it's just a preference. So when you see these lines here, my blue is my 9 EMA, my red is my 20 EMA, my black is my 50, and my purple is 200. Again, it's just my preference on how I do things. I'm a very short-term trader, and I color them this way just because it's how I like to color them. Not really. You'll see everybody colors them differently. It's just a matter of preference. I have a black or a white background here, so that's why I have these colors. If you have the black background, some people use a different color. If you want to see how I have them set up here, if you go to Filter Studies, excuse me, in Edit Studies, you'll see here, these are my exponential moving averages. And if you want to know how I set this up in Thinkorswim, this is the platform I use. Just watch our Thinkorswim playlist on YouTube. You'll see a whole bunch of tutorial videos on how I set this up. So you'll see this chart here has the 9, 20, 50, and 200 EMAs, RSI, and MACD. Excuse me, again, it's my preference. Some people use different indicators. You got to find the trading style that's right for you. But for day trading, the 9 and the 20 are very, very popular. I have them on here as well for my daily charts. Again, just a matter of preference. So I'll show you a few day chart setups and how these moving averages work with the other indicators, and then I'll show you some day trading, the shorter term charts, like a 1 and a 5 minute, to show you how it works. Again, traders from around the world obey these moving averages. Your first line of defense really are candlesticks and learning candlesticks and their patterns, and then EMAs, And then you have the other lagging indicators such as RSI and MACD, which are extremely popular, but EMAs are right up there with the candlesticks. So those candlesticks and EMAs are your most popular lines of defense when trading. So looking here, you'll see again the 9 and the 20 and the 50 and the 200. And whenever price is above the EMAs, it's a bullish signal. So when the 9's over the 20 and over the 50 and the 200 and price is above that, that's all bullish. That's all a bullish signal. When price starts to pull back, that's something called a pullback. So when price starts to go up in these areas of overbought, it eventually wants to pull back because people want to take their profit. So RSI, when it gets overbought in an area like this or oversold in the area like this, and this area buyers start to come in down here and drive the price up. When price is overbought, price, excuse me, people take their profits, and then price comes down and they start moving these moving average lines. So you'll start to see it's all very bullish here, and then it just excuse me, price is obeying these moving average lines. And as long as they kind of bounce and go up, it keeps the trend going. Once it starts to close below these EMA lines, then you got to watch it. The more overbought price tends to get, the more it starts to move down to these other moving average lines. So there's no way to completely predict what a stock is going to do. Candlesticks will help you. It's probably one of your best ways to really understand what's going on is candlesticks, then the EMAs, but it's all a big picture. That's why you have these other indicators too, to give you a big picture of everything, because it is impossible to predict a trend of a stock and what's gonna happen with it, because the market can change on a whim. So you can never 100% fully predict what a stock is going to do, and that's why you have to look at the big picture. So these lines show you what's happening. And as you can see, when price goes up, people start to want to take their profits, and it starts to come back down to these moving average lines. It starts to hit the 9, then it'll hit the 20, and then you want to see a direction. Is it going to fall back down to the 50 and go down further, or will price continue to go up? You can start to see all price really heavily weighs these moving average lines. No matter what trend, if the trend is going up, you'll see it follow the trend. You'll see this right here. This is the S&P SPX. The S&P's been in a massively bullish run the past few months. So you'll see price going up above these moving average lines. People take their profit, starts to move back and pulls back to the moving average lines. Then you'll see here it kind of goes up, consolidates, comes back down, falls below the 9 moving average, hits the 20, and then it wants to choose a direction. That's a very critical direction here. That would have been a potentially bearish signal going down maybe even further, but another green candlestick came in and continued it up. Consolidation here, and you look, price just obeys these moving average lines. Traders from around the world watch moving average lines like a hawk. I cannot stress that enough, the importance of moving average lines, candlesticks and moving average lines, excuse me, and the patterns that these candlesticks create really give the big picture overall of the stock. And then the stocks within that sector move up or down within that sector a lot of times. So this is the S&P. If the S&P is very bullish, then a lot of the stocks within that sector might be bullish. Again, there's no guarantee, but you got to watch it. That's where you got to watch and do your proper technical analysis. But as you can see here, on a very bullish trend, you see price when it's above these indicators, the 9 and the 20. That's a very bullish sign. This is beautiful, and you'll see profits come back, go up. So pullback goes up, pulls back down to the EMAs and keeps going. And now eventually, at some point, someday, it'll probably pull back, even further. It's super overbought. It's got to come back down. So price, as you can see, if you go back here, this is where you can see price. Price is bearish. So you'll see prices below the 9 EMA. So you'll see the 20. So you'll see the 50s up here, the 20, and the 9, and price is all below that. So you'll see it's bearish. These are forms of resistance. So when the lines are above price, that's resistance. When the lines are below price, that's support. So these are support and resistance lines as well. They're very, very critical. So once these candlesticks starts to fall it's hitting support lines, and you got to see, is it going to keep falling back down, or is it going to go and bounce back up? That's why you have to watch it. You have to study candlestick patterns, study the charts. Follow our YouTube channel and watch our patterns videos where you see lots of these patterns being formed, these candlestick patterns, and you can see how you can put the big picture together with these EMA lines. Make sure you watch our pattern videos because we try to do our best to really put a lot of content out to help you. But again, just to kind of just drum it in and really stress the point, when price is above these EMAs, that's a very bullish sign. When you start to look at these other indicators like RSI and price starts to get overbought, it starts to want to pull back. People want to take their profits, and then either the stock's going to keep falling below the EMA lines or it's going to go back up. But again, bullish, and this is bearish. Bearish is the price is below these EMA lines, and that's resistance. When you start to see a crossover, the 9 crossing over the 20 and it goes up and price goes with it, that's a potential trend reversal. And as you can see, once it crosses, price is now going back up. A lot of traders wait for that crossover. There's all different strategies on what to do, but if you want to be the safest way, you want to wait for these lines to cross over and then price to go back up above it. And you can see this other indicator, MACD, goes along with it. So that's where if you watch these crossovers and price going up with it with the MACD, those are all bullish indicators. Again, the indicators are lagging indicators. Your quickest line of defense is your candlesticks and then your EMA lines to give you your quickest line of defense. But that's how a very bullish stock runs. So this is actually the S&P. This is a whole sector here. Let me show you gold and give you a little bit more of a bearish sector. So you can see the moving average lines here. You can see there's lots of choppiness over here. But if you look over here, let me zoom in down here. Look at this, very bearish. So you'll see the 9 is below the 20 and is below the 50. So these moving average lines are all above the price and it's pushing the price down. So these are all resistance areas. This 9 is resistance. Look at it. Price keeps going up and smacking the resistance areas until it finds a bottom on a base. Again, it's not always going to be this way, but you can see the base down here with RSI. It's very oversold. You could, wait to get in on this base here. If you think this is the base, you can buy and hold. Some people try and buy and they'll hold and they'll wait through the consolidation, but you'd want to start to wait for this 9 to cross back over the 20 again over here and price to go up here for it to become more bullish. Again, it's all your trading style, but a lot of people could get fooled, and when RSI is oversold here, they might say, oh, I'm going to buy right here because it's oversold. But look, it keeps going down, and look at how long it got oversold for, where a lot of people would think that gold was finding a base at these areas, but it wasn't until it found one really down here. And you want to wait for these EMA lines to cross. These crossover lines are extremely important to really look for, or else you could be, getting caught up here and bag holding. Like if you bought here, you'd have to wait all the way over here to just start to break even. That could be months of just your money being tied up and causing a lot of pain. And that's why you want to watch these indicators and watch these EMA lines cross. When this 9 starts to cross the 50 or the 20, that's a very bullish sign. And when it goes up above the 50 and then up over the 200 over here, you'll start to see it's a very bullish sign. And then at some point, once it starts to get overbought, it starts to pull back again. Now, this is a very, this is a hammer here. Now, is this going to hit a base right here? That's candlesticks tell a very important pattern. This is a hammer right here that might be causing another base. Now, you might see the next candlestick go up. You might see some consolidation, but it's a potential trend reversal. It's something to watch, keep an eye on. But look, right at the EMA line. That closed today. I'm making this, what is this, March 3rd here right now. This closes right at the 20 EMA. But look, it almost touched that 50 EMA right down here. And see that? These traders obey these moving average lines. So once they start to fall, you'll start to see price falls over here. And what does it do right here, this red candlestick? It hits the 20 and then it comes down to the 50. Now that could be due to it being potentially overbought. In this area over here, overbought, people taking their profits, coming down here. There happened to be, a speech by Janet Yellen today, so a lot of potential nervousness. So maybe traders were taking their profits up here. They were nervous about what she was going to say. But even so, it's obeying these moving average lines. If it starts to close below here now, the 50, then who knows? It might fall back down again, and it can fall. It could have a long way to fall. But it's all about these moving average lines. Where is price? Is price above the moving average lines? Is the 9 above the 20, above the 20, above the 200, which is very bullish? Or are all those, or are, excuse me, are those moving average lines above, like over here? Massive resistance. Here it starts to break into resistance, but it's still not going to be breaking through until it starts breaking through this 20 and then breaking back through the 50 again and having these lines cross. You want to really pay attention to these crossovers because on all time frames, it's very, very important. Traders keep notice of this. So those are two of the major indexes. You'll see the S&P and gold. Let me show you a few now of some stocks today that we're just running on the 1 and the 5 minute chart and give you a picture of what day traders actually look at when trading EMAs. So we'll pull up BCRX. Actually, let me pull up another chart here, a 2 cell active trader chart. If you want to learn more about Thinkorswim or how I have my chart set up, watch our Thinkorswim videos on our playlist. I really show you how to set all this up and really get a big picture of it. So you'll see here, it's kind of hard. Hard to get this set up here. But you'll see, again, moving averages all on my chart with the candlesticks and these other indicators. But when you start to see price, again, the 9 over the 20 over the 50, this is a very bullish sign. So once it goes up, what's it do? It wants to pull back to the 9 first. If it bounces off the 9, then it might create another candlestick up, a bullish sign, and then it starts to pull back, hits the 9. See, it obeys these moving average lines. It bounces, and then eventually, at some point, you never know. This is a 5 minute chart right here. Price will start to break below the 9. Then it might start to break below the 20, and then it could start to potentially fall. But you'll see this happen all throughout the day. And, excuse me, this one, if you go back to this morning, you'll see it started off on the 5 minute chart. You'll see right here, the 9 crossed below the 20, which is the red. So the blue is the 9, the 20 is the red. Once you start to see a crossover like that, that's a bearish sign. So when the 9 crosses below the 20 and price starts to fall below, that's very bearish. Now you have, these are resistance. The EMAs become resistance lines. And then you'll see the candlesticks forming a pattern. Right here was kind of forming and hammering a base and consolidating. You can see it was oversold. And then what you want to wait for is you want to wait for price to go all the way through again. And this was kind of a potential fake out. See, the 9, this is where you want to be really careful. You want to wait for these lines to really do clear breaks. A lot of times they'll come together and pinch and then fall back down. You can see here, this is looking like it's going to be very bullish or a bullish signal, and it goes and it hits, but what does it do? It smacks back down. It doesn't cross all the way through. Whereas if you see, let me go a little bit further. Right here, this is more of a bullish signal. You want to see it, the 9 cross the 20 and candlesticks breaking through. But at the same time, this is a mess today because of Yellen speaking. And normally that could be a potential bullish signal, but you got to find out also, where are the highs for the day? Is it breaking the high of the day? What's the stock doing? This is a very volatile, crazy stock today. But again, this is just moving average lines, how they work. Let me pull up BCRX. So this is a little bit of a better one where you'd start to see here. Let me see if I can pull up the 1 minute chart. So what basically traders are going to do, a day trader is going to do, is they're going to watch their scanners for movement in the morning and see what's actually happening. And then they're going to pull up the stock, and then they're going to pull up lines of support and resistance. And they're going to find those areas of support and resistance. and I'll give you an example of that. So look at this. This has been running for 5 days now. This was over $3.82 up to $7.70. At some point, this is going to want to pull back. Who knows when? But you want to find these areas of support and resistance. So you put here, right at the top, the high of the day here was the 770. So that's resistance, right? But these support lines, again, these are support lines, and you can see price. I'm trying to zoom in here. I have the multiple chart set up. I want to show you what a day trader looks like. You'll see price 9 crossing over this 20 and price riding up. So it rides up, kind of pulls back in, rides up, pulls back in, up, pulls back in. And these traders wait and they watch for price to go, to either stay above these moving average lines or whether it's going to break and fall down. Whereas you see up here, it starts to hit a peak, and look, it starts to fall down. And what does it do? It crosses below the 9, starts hitting the 20, it starts bouncing and consolidating, and then you'll see right here, it starts to fall here. Could have been a potential drop down more, but buyers came back in, kept it up, but eventually at some point it's going to fall. Again, it goes up here to a peak, falls back down, hits these moving average lines, goes below, and then you'll start to see some consolidation all throughout here. The lines getting tighter together, and then towards the end of the day, looks like there was a big red candlestick. I'm making this on a Friday, so who knows what's going to happen over the weekend. But look at on the 1-minute chart. So now traders, day traders are going to look and find their entry on the 1-minute chart and see what's happening on the 5-minute chart with a big picture. And as you can see here, this opened up with a massive red candlestick, another one down, finds a base, and then there was quite a bit of a mess for a little while there until you start to see it change over here. So you'll see that it goes, it's just a mess. The 20's over the 9 right here, but then look over here, the 20 crosses, the 9 crosses over the 20 here, big red candlestick up, smacks back down, but then what does it do? You'll start to see price kind of rides up a little bit, crosses back down. And again, this could be very volatile here for you, but that's why you got to look at the bigger picture with the 5-minute chart as well. So, if you're kind of comparing this over here, you can see what's happening over here. And yes, this stock was a mess for a while today, but then it eventually went up a little bit. And let me see if this will coincide with that. Let me see, when did this happen here? 10:58. Yeah, right around here. So you start to see the change right here. So when you have the 1 with the 5, you can see the 5 gives you the big picture of actually what's happening with the day trading. So you can see it going up here, pulls back and starts to ride and goes up. So your basic traders are looking at these moving average lines. When this 9 is really above this 20 like this and separated, that's a very bullish signal, as well as the MACD lines being separated. It's very bullish, and price rides these EMAs. Traders keep an eye on it, and then they start taking their profits when they start seeing, with the candlesticks, they start looking at the patterns, and then they look at the EMAs and then the other indicators afterwards, these lagging indicators, MACD and RSI, to get a bigger picture. Let's pull up RNVA. Here's another one here. This morning, look at this, the 9's over the 20. Now this is a really beautiful one right here on the 5-minute chart. Look at this. This goes up, pulls back. Beautiful flagpole here up, starts to pull back. But look, it starts going back towards this 9 EMA, goes up again. Now you can see up here, really huge peak, massively overbought. What's it going to want to do? It's going to want to pull back. People want to take their profits, and it's going to come down. What does it do? It smacks this 9 EMA. Another candlestick on the 9 EMA. What's it do? Then it drops down to the 20, holding that 20 support line, goes up, and then it comes back down again. Now it breaks the 20 support line. Let's see what happens from there. You start to see it's going up, breaking down, up, down, up, down. And this is a kind of a weird one. So this kind of like, this data in this channel today was real choppy and messy. But in the beginning of the day, it was a beautiful move right here. The 9 over the 20, very bullish. If I zoom in on the 1-minute chart, you'll see here, look at that. 9 over the 20, look at it riding up, pulling back to the 9, up, pulling back to the 9, up to the 9, up to the 9, and then finds its peak. And what does it do? It forms this big like FU pattern here, like a big middle finger. So like right here with the middle finger, you'll start to see it, also known as a head and shoulders. And then when it breaks that trend up here, it starts to fall back down. And what happens here? You'll start to see, excuse me, the 9 starts to cross over the 20, which is a bearish signal. And what does price do? It starts to fall down. So that's where you really want to be. Always keep an eye on the 9 crossing the 20 or whatever indicators you're using. Make sure your short-term indicator is above, followed by your other ones. This is very bullish. This is a very, very bullish sign. But at some point, once it gets overbought in these areas, traders are going to want to take their profits, price falls back, and then you want to just watch these moving average lines. So just to show you on these chart time frames, these are just shorter time frames compared to the longer day time frames, but traders obey these. They watch them like a hawk. So hopefully this helped you. Again, I don't want to go too in depth. I wanted to show you some examples of what it looks like on a daily chart and on a 5-minute and a 1-minute chart, and how traders trade. You know, these day traders, they look on, you know, the 1 and the 5-minute charts, or the 1 and the 3. They also look at the bigger picture of the charts on the daily and the weekly. They watch these EMA lines. They want to make sure price, again, if they're bullish on a stock, they ride them when price is above these EMA lines, and they watch for the break of these EMA lines, and they watch for the crossovers. Shorters watch for, you know, people that short stock, watch for you know, these EMAs to cross and price to start falling below them. They watch it. So a lot of them will just wait for it to find a peak, and then they'll short, you know, back down into the EMA lines or the break to the EMA lines. But again, it's so important to watch these moving average lines. Don't get too caught up in the technicals of what it exactly means. Just watch it. You'll start to see when you study charts and patterns, candlesticks obey these moving average lines, and traders from around the world watch them like a hawk.